Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is February 11th, 2025, and today on our call, we have the CEO, Adamou from Overactive Media. Overactive trades on the TSX Venture Exchange under the symbol OAM, and it also trades on the OTC under OAMCF. The company is currently trading at 31 cents with about 126 million shares outstanding, or about a $39 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Adam, great to have you here. Overactive Media is a story that we've actually heard in the past, but we decided to do sort of a complete refresher because you guys have done a significant restructuring. You guys have changed the management team. So lots of stuff that's kind of changed here. So happy to have you here to sort of tell us all about the new things that are going on. So I'm just going to hand it over to you. You've got your presentation ready to go. So let's roll.
Okay. Thank you very much, Paul. And welcome to everybody on the stream. My name is Adamou. I apologize in advance. I've got a bit of a cold and I've been hacking all day, but I had some tea with some honey in it, and now I feel, I think, good enough for this presentation. But if I stumble or cough or hack, apologies in advance. I'll try to mute it. As mentioned, we are Overactive Media. We're proud to be one of the few and perhaps only pure play esports companies that is publicly listed. I'm going to go through about 30 minutes, kind of the A to Z of esports, because I think for those that don't know it, it's a new sector, and for those that do, it is often misunderstood. So with that, let me jump into it. And I'm going to jump into it by basically going to the end here. Okay, here's what I'm going to tell you in this presentation so that I don't keep you in suspense. First and foremost, 2024, our expectation for revenue is $25 million. That's about a 70% increase year over year from 2023. We've got an incredibly strong balance sheet. I've got about $9.5 million in net working capital as our latest public release in September, and we effectively have no debt and, in fact, no liabilities on our balance sheet. I'll explain that when we get to that section as well. We have been able to negotiate in our business access to some of the biggest gaming stores, video game stores in the world: League of Legends, Valorant, Call of Duty, and others, that have allowed us to get access to digital sales for our IP, our kind of team branded merchandise, which we sell digitally on these video game stores. And those, we refer to them as digital sales, or MTX. MTX stands for microtransactions, have been boosting our revenues and leading to our growth. We expect profitability in 2025, which we're in right now. And over the last 6 years, we've become an industry consolidator. We've made 5 acquisitions in the last 6 years, good, strong, accretive acquisitions. As I mentioned, we've got an incredibly strong balance sheet, so I don't have balloon payments, I don't have debt, I don't have a whole bunch of liabilities on my balance sheet as a result of my acquisitions. We're a very smart buyer, and we've been doing it consistently and perhaps quietly out there in the market. Our assets, on the other hand, are also monetizable. So think of us as a kind of professional sports ownership group, but for esports, which is competitive video gaming. And our franchises, just like the Leafs or the Raptors or the Canucks or your favorite team in a traditional sport, those franchises have value. And those franchises can be sold or traded in some cases. And those assets are on our balance sheet, fully paid off, and we believe not represented in our market cap, which creates an opportunity for all of you. Okay, that's what I'm going to go through. I'm going to go through each of those points right now. But I'm going to begin with, kind of a very high level. What is esports? This is how we see esports and that we define the business for ourselves, which begins with a publisher. A publisher is a game developer. Think of it like Activision, Blizzard, Valve, Riot Games. They make games, okay, and they want to sell them. And the games are kind of at the core of esports. And most of these games in the esports world are actually free to play. You don't actually have to go and buy them at your local, GameStop or on your game store. You actually can just download them and play them for free. They're huge games, and they're have huge monetization. But that monetization happens through an online digital store. So think of it like your app store for your phone, or I guess your Google or your iPhone. But in this case, it is a digital store that is specific to the particular game. So if you're playing League of Legends, for example, you would go to the launcher, you would go to their digital store because the game is free to play, and then you could buy IP, skins as we call them, to customize your in-game character so that it has a look that relates closer to you. And those stores are huge. The billions and billions and billions of dollars that go to the publisher for developing the game all come from the digital store, okay, because the game is free. And that's the central component of the esports model as it's developing. In order to better monetize their games, the publishers create leagues of competitive players. The players that are playing the game want to watch the best players in the world do the same thing. It inspires them to play more and perhaps to buy some more skins on the digital store. And what they do is they invite organizations like us, which is what Overactive is, an organization that plays in the different leagues in the various games that were published, that we're partnered with the publishers on. And we create teams of the best players, and then they compete each other in these professional leagues. There are specific types of agreements that we have with the publishers that create a more structured system so that it's not just 5,000 guys that are friends getting together to play on a team. The publishers, in order to streamline the process, have created franchises that basically limit the ability to play at the highest level with the teams that they believe are the best partners. And that's where we come in again. We own some of these franchised teams. Okay. Now that's kind of where the previous model for esports ended. And the rest of this is the new model that we've been able to advance over the last couple of years, and that is driving to the tremendous growth in revenues and path to profitability that we have. And it begins with a co-streamer. In traditional sports, what you have is a cable deal. So think about, ESPN or Rogers or whatever is out there buying the rights to broadcast the sport. In esports, it doesn't work that way because our audience doesn't use cable and has basically completely gone offline. And so what we do is we partner with a streamer. This is a famous broadcaster that is popular with our fans, who broadcast our games to them on their own channels, usually Twitch or YouTube. And the co-streamer drives the audience. So the audience goes in to watch the co-streamer that is broadcasting our game. And to the extent that that co-streamer is popular and our teams are doing well, that audience becomes fans of our team and our intellectual property. And that's what we monetize, that fandom. And we monetize it in two different ways. One is by going to sponsors and basically saying, hey, look at all of these fans of 20-somethings that we have that are passionate about our games and that are watching our players. Do you want to be in front of them? And about 21 sponsors in 2024 said, yes, we want to partner with you, Overactive Media. And the final part is really the new revenue source that emerged in 2024, which is MTX, which I mentioned earlier on. MTX stands for microtransaction, and that is the digital item that you can go to the store and buy if you are a fan. And what the publishers have done over the last couple of years is they have invited us and other teams that are like us into their digital stores. So if you're a Call of Duty player, a Valorant player, a League of Legends player, you can go to the digital store, which is the honeypot for the publisher, and buy our Toronto Ultra or our movie star Koi skins. You can put them on your player and you can play representing your favorite team, just like you would wear a Vancouver Canucks baseball cap or a Toronto Maple Leafs jersey. And that is pure margin for us. It is available to players around the world, and it is driving our path to profitability. And all of that together is esports, which is what we are all about. A global esports company for today's generation of fans. We are headquartered proudly here in Toronto. We have a European headquarters in Madrid. We've got an influencer base. These are our co-streamers in Barcelona. And we have a bunch of teams that also play out of Berlin. And what we do is we compete in the biggest global leagues in the world. We create these exceptional teams of the best players in the world, and we partner with the publishers to join the exclusive professional leagues that they launch. And then what we do is we partner with these top influencers to help to build an audience that is passionate about our brands. I want the audience to be connected to my brands. That's the most critical component of our monetization. And what that does is it creates a consumer channel that currently reaches about 100 million fans that is following and watching and tracking our teams. That is a powerful consumer channel that I have direct access to. And then we monetize that channel through these sponsorships and the digital microtransactions that I mentioned through the digital stores. And that is, my friends, as simple as it can be, but difficult to execute. So what we've been focused on is the world's biggest leagues, as I mentioned earlier. And we identify the biggest leagues by simply which has the highest viewership and what has the biggest online store. Viewership without a big store doesn't do much good for us because I can't sell my digital merchandise. Okay, and a big store without viewership has the same problem. So we try to combine that with the biggest games, with the biggest online digital stores. And there's four that reach that level for us. One is League of Legends, which is the world's biggest esport by viewership and by the size of the store. Second is Valorant, which is also a game published by Riot Games, the same publisher of League of Legends. That is a global game with a tremendously big online store, driven in part by huge revenues out of China. Third is Call of Duty, which is the biggest game in the world and one of the most popular games here in North America. And finally, Counter-Strike 2 is kind of the legendary 20-plus-year-old esport video game that is published by Valve. And there's many other games. There's Tier 2 games. There's Fortnite. There's Rocket League. There's Rainbow Six. There's a whole bunch of other games out there that we may dabble in. We'll kind of take a look and see what makes sense. But they don't reach the level of either viewership or store monetization that makes us want to go all in over there. And as you can see here on this chart, there's very few teams that are in all four games because those games are very expensive. If you're in the big leagues, you're going to pay your players more. You're going to have coaches and staff and scouting and all of the things that a professional organization has. And each of those are expensive. And so what you find is that as you go from left to right here, certain teams have less and less of these big teams in their repertoire because, frankly, either they are too expensive to afford or they haven't been invited into the publisher's partnership. And our business model is going back to kind of our 1-2 of our business model. Remember, I was talking about sponsorships on the one part and digital merchandise or MTX on the other. And what we've been doing over the last year is really focusing on a model that is really, really simple, but difficult to execute, which is I want to cover all of our overhead through the strategic partnerships with the brands, i.e. the sponsors. I want the sponsors to pay all of my overhead. And as I said, we've got 21 last year. We're moving kind of steadily towards that objective, okay? And if I can get all of my overhead to be covered by the sponsors, that means that highly lucrative, 100% gross margin MTX that is sold on the digital stores, that can be my profit. And if I can do that, esports is not only a profitable business, it is a very, very profitable business. And we are, I guess, marching headlong into that path, and we're getting very close in 2025 to achieving that. Now, let me just talk a little bit about the channel, because many of you understand distribution channels if you follow other types of businesses, but our channel is really about 100 million, as I said, fans that are engaged with our games, our influencers, and our teams. And we see this as being a direct channel. I can sell things through this channel. And the beautiful thing is, traditionally, a channel is very expensive to build and to maintain. But in the esports, in the digital ecosystem, it actually isn't, because we have partnerships with YouTube and Twitch, and we use their infrastructure to create the pipeline to our fans. And rather than paying YouTube and Twitch to host the infrastructure, they pay us or our influencers for the viewership. And that's why our gross margins are so high. I have a fully paid for distribution channel to hundreds of millions of 20-something-year-old consumers that doesn't cost me anything to reach. In fact, they pay me for it. And that leads to very high gross margins for my business. When I'm talking about $25 million in revenue, that's about 70% gross profit. And when you're looking at other companies that claim to be in esports or adjacent to esports, you will find one key difference between them and us. Their gross margins are usually 5, 10, 15, 20. Maybe they can creep to 30%. Okay, mine are 70%. The difference between them and us, the reason that our costs are so much lower, is that I own the channel. They have to pay for channel access. And that creates a significant competitive advantage for us. And so what we do is we manage that channel daily. We obviously, our teams are playing. We've got a bunch of games coming up on the weekend. So Friday, Saturday, Sunday, we've got multiple teams playing. But beyond just the teams that are playing, we have our co-streamers that are on creating content daily. We've got Konecro, who might be streaming Pokemon, for example, and our sponsor assets are on the on his screen while he's basically streaming his assets. And that daily content for our teams, through our partners, through our channels, locks in the viewership for our brands. And that has created a channel of unparalleled global reach. Now, let me explain to you, 100 million fans is a really big number. And I've heard other teams that talk about billions of fans, which I think is an insane number, okay? So let me just put into perspective what 100 million fans means the way that we're describing it, okay? And what that means is I can reach 100 million people by not having to pay anybody to do it. I can either send a message on social media, whether it's Instagram or Twitch or YouTube or X or whatever the channel might be, or I can go through one of our influencers and send a message through them. I can do a call of action through any one of these channels. 100 million fans worldwide, and I don't have to pay anybody for it. That is an incredibly powerful channel to own. And what that does, because we've got so many audience, such a big audience, is our games have very high viewership relative to other teams. Of course it would, right? If you've got 100 million fans, you're going to have very high viewership. And that's one of the determinants. That's one of the pieces of evidence that our fans are real. The second component is that our digital merchandise, the things that are on the online stores, should sell very well, and they do. Toronto Ultra, for example, in 2024, had the best-selling Call of Duty League skin in the world, okay? In the world for a Toronto-based team. Even my friends at Maple Leaf Sports and Entertainment come and ask me sometimes, how did you guys become so big outside of Toronto? And I tell them it's a difference in business model, my friends, and I can teach you someday, but not right now. If you have 100 million fans that are average age of 24, you can't just be big in one country. There is no country outside of maybe China that has that many young people. So we are big in multiple regions. We are big in Europe, we are big in North America, and we are big in Latin America as well. In fact, we're going to be expanding into Mexico later this year. And also our social media should have very high engagement. When we do a call to action, there should be a big response. And our teams have among the highest engagement in esports, which is, again, another verification that our fans are real. But more important than just that verification, I'll kind of shift you over here to the left side of the screen. And this is a JP Morgan study that was done in 2024. It changes over time. But these are the world's top Twitch streamers. And these people are celebrities, of course, in their own right. You see them everywhere these days, and they generate a lot of fandom and influence for themselves. But the number one streamer in the world is a gentleman by the name of Ibai Llanos, who is a shareholder and partner of ours, and whose company we acquired early last year. And that was an incredibly positive acquisition for both of us, because not only did we benefit by bringing Ibai and his influence and reach to our teams, but as you can see, Ibai grew tremendously as well. His average viewership increased by 479% post the acquisition of his company by us. And in fact, he's so big right now that he is bigger than the next three, almost the next three combined. He is as big as the next two and almost the next three combined. And that drives a lot of the fandom, a lot of the viewership, and a lot of the engagement when you have streamers of that caliber that are associated with your team. And our social engagement leads the world. I'll just really quickly show you over here, for example, on the upper left is League of Legends. This is last year, not this year. I haven't updated this, but I think it makes the point. Our team is MAD, Mad Lions. And you can see in terms of viewership over the regular season, Mad Lions is #1 with G2. Our game against G2 is #1. But our game against Carmine Corp, KC, was #2. And then our game against SK was #4. 3 of the top 5 games in League of Legends, which is among the biggest esports in the world, featured our team. And then for the World Championships on the lower left there, you can see we're at the very top of the play-in teams' peak viewership. Okay, this #2 team is an Asian team. The #3 team is 100 Thieves, which is an American team. You can see the teams over there. #1 at the top of the list is our team. And what that does is it makes partners very excited to partner with us because they want access to our audience. And as you can see here, this is our 2024 roster of partners. There's about 20 of them here. They range in terms of the revenue from about 50,000 on the low end, where we might do like a one-off project with somebody who wants to dip their toe in, to many millions of dollars per year. Most of these contracts are multi-year, 2 to 3 years in length. I think the average length of a contract right now, as I look at it, is about 2 years. Many of our biggest partners have renewed repeatedly. So Telefonica, for example, which is our big partner in Europe, that's the M there. They've been with us for going on 7 years now. Bell has been with us for 6 years. You've got Razer, Pepsi, Scus, Zilliqa, Red Bull, Monster. All of these partners pay us to be associated with our team because we have a large audience that they want to reach, and they want to be partnered with us for that opportunity. But just as important is our access to these online stores. And to get access to the digital merchandise on the online stores, you have to be a good partner with the publisher. The publisher does not want anybody and everybody into their stores. They're primarily concerned about cannibalization and basically having people buy skins that are not accretive to their revenue. And so what they do is they limit who can basically sell their proprietary skins on their digital stores to those teams with the biggest fan bases. And of course, we've got among the largest, and so we're in all of the sports that we wanted to be in. And to explain to you how this works, if you take a look at the top left there, that's our Toronto Ultra skin, which I mentioned earlier. Toronto Ultra is our Call of Duty team. Call of Duty is a very big game. It is usually the best-selling game of every year in North America and most of Europe. So it's a big game. We have our skins available on the store. And whether you're on your Xbox or your PlayStation or on your PC, on Steam, for example, you can go to the Steam store. If you're on your PC, you can go Call of Duty League, Toronto Ultra, and up will pop up our skin, looking like it does there in that picture. It's $16 or about $15.99 Canadian. You can add it to your cart, you pay for it, and I get a cut. That revenue I receive net of the store fee, the partnership amount that goes back to Blizzard and so forth. So I recognize the net amount, but that net amount is pure margin for me. Okay. It's the most lucrative revenue that we have, and we're in the biggest stores. As I said, Counter-Strike, League of Legends, Valorant, and Call of Duty. And while I'm doing this presentation for you right now, I'm happy to say that these skins are being sold. There's probably people buying them, not just in Canada or the US or Spain or Europe, but in Chile, in Brazil, in Korea, in Japan, and in China. And it always makes me happy when I know that my revenue is growing while everybody is sleeping, at least in our markets over here. And the momentum for esports is building. We have, over the last year, seen the launch of the Esports World Cup, which has been launched by the Savvy Group, which is a Saudi-based group. And what they did is they want to create a global tournament of the best esports teams across all of the different games. And we're one of the partners for the Esports World Cup. At least we were in 2024. They're renewing it again for 2025. It's a tremendous revenue opportunity for us. but it's also an opportunity to normalize and grow the esports audience. And just today, actually, it was finally confirmed that the Esports Olympics will launch in 2027. There was a big announcement today. It was announced in 2025, but the first Olympic Esports Games will be held in 2027. Again, the first ones will be hosted in the Kingdom of Saudi Arabia. Saudi Arabia has emerged as one of the biggest backers and supporters of esports. As you know, they're also big supporters of football, European football, golf, Formula One. Well, you can add esports to that list. In terms of our trajectory, we have worked very hard to build our model to be what you are seeing here in this presentation today. It wasn't always like this, largely because the early days required us to basically put up a lot of money to buy the franchises, which we restructured out, and also didn't give us access to that digital merchandise on the stores, which we've been able to negotiate in. And so when you take a look at our 5-year path over here, you can see 21, 22, and 23. We went public in 2021, as an aside, at $2.20 per share. Those upfront costs for running teams are very high. You know, there's a big fixed cost component for me running my teams, my players, my coaches, my facilities, my apartments, my health. All of that stuff costs money. And if you're in the big games, those fixed costs are going to be high. And so it's always a challenge to be able to survive, the building of your fixed cost with the, revenue growth that follows. Excuse me. And so in 21 and 22 and 23, we frankly didn't grow our revenue fast enough. Let's go to our this is September 2024. This is the last financial results that we released. You can see that we have about $9.5 million in net working capital. You can see $18.8 million in current assets, $9.3 million in current liabilities. Now you cancel those out and you have about $9.5 million. Then when you take a look at our other liabilities, we have about $6.4 million in deferred tax liabilities, which is a non-cash obligation. So that will be paid out of whatever the government tax stuff is that comes to that number, out of some future profitability. So that's a non-cash item on my balance sheet. And then I've got $2.4 million in long-term liabilities. Of that $2.4 million, $2 million is a remaining payment on our League of Legends franchise that I've been talking quite a bit about in this presentation. And that $2 million payment has been restructured out. In other words, in November of 2024, we came to an agreement. The European teams for League of Legends came to an agreement with Riot Games, which is the publisher, and they waived the $2 million payment that was owed by the teams. Each team owed about $2 million. And so that's gone. Okay, we came to a new partnership agreement with Riot that, among other things, gave us additional access to their online stores. So that $2 million is gone as of today. And the only liability that I have that is a cash liability is approximately $400,000 that I think relates to, COVID or CERB or whatever other payments we've received, right? But we have effectively, when you take a look at it that way, like not only no debt, but really very minimal liabilities. I also want to turn to your attention the LEC franchise asset that I've got in my books for $25 million. And I want to just highlight that is a real value there. These franchises, like professional sports teams, can be sold. And what we've seen in League of Legends is that over the last 3 years, 3 teams have changed hands from one party to another in third-party transactions. The average selling price of the franchise is approximately $35 million. And when I say $35 million for the franchise, let me explain what that means. That is, somebody paid that amount for the right to play in the league. That doesn't include your business, your operations, your assets, your cash, your working capital, your players, your branding, your intellectual property, or anything else that you have. Okay, that is just the license to play in the league. $35 million in these 3 transactions that happened. Okay, real value that is monetizable, that has a history of at least 3 transactions in the last 3 years. So we have one of those franchises in our books. We're carrying it at about 25 million, but the market value is about 35 million based on these transactions that we've seen out there. And I don't owe anything for it. As I said, I not only not have any debt, I barely have any liabilities. Okay. And there's also an active market for Call of Duty and Valorant and the other franchises, but let's just kind of park that for now, because while we own all 3 franchises, free and clear, you know, our market cap, as I'll kind of go to the next slide in a second, you know, doesn't even include really the value of any one of those in our books. And look, our business is misunderstood, and that's part of the reason why I'm here telling you the story. But we're also a very smart global consolidator. We've made, as I said, 5 acquisitions in the last 6 years. Our acquisitions are internally funded, meaning not only do we pay for them directly, usually I, you know, kind of issue stock or some other kind of performance metric that does not result in me having liabilities on my balance sheet. But we have a team internally that effectively does our M&A. So I'm not out there hiring and paying for, you know, advisors that, you know, are going to show me crap so that they can get paid. We're very careful with how we put together our acquisitions. They've been sensible, they've been accretive, they've been fully funded. I'm not carrying any debt against them. And they've allowed me to acquire teams in every major franchise partnered league that we've got here. We've been able to use targeted M&A to build our distribution channels to, as I said, over 100 million plus audience of fans and influencers and so forth. We've established our capabilities across, you know, live events. We just ran a Call of Duty major in Madrid. We're going to be running another one here in Toronto later this year. Those are part of our group of people that have those capabilities and that have come from acquisitions that we've done in the past. And look, I'm looking for acquisitions on an ongoing basis. You know, kind of at the top there, I've got professional sports. I honestly think that moving from esports to professional sports makes a lot of sense. Maybe not today, based on the difference in market caps, but I do think that what we bring to professional sports teams in terms of how we manage the audience, how we partner with influencers, how we manage the fans and the social media and all of those things that come with esports is something that professional sports teams do very, very, very badly. And we have, you know, the Montreal Canadiens are shareholders of ours. We've got Mitch Marner. I've got a bunch of people in the normal sports world that are partners with ours, and they frankly are just, you know, they're kind of in the blockbuster era, if you will. And I think they will eventually come over here, but they don't know how. Speaking of our team, you've got myself, the CEO, who nearly coughed up a lung here on this presentation. Rakesh Shah is my background, as an aside, is venture capital and M&A. So I'm you know, kind of come from that part of the world. I also have run a number of companies. I guess most recently I ran a company that was in the digital media space in Ottawa for a number of years, maybe about 10 years ago. And this was a project that you know, kind of I came up with alongside Sheldon Pollock and a few other co-founders and long-term partners of mine. Sheldon is our chairman of the board. I've known him since the 1990s, and we've done things together off and on. And this is an idea that germinated around 2017, and we've been able to bring to fruition here. Rakesh is our CFO. He comes from the Canadian Olympic Committee. Fernando Picker is our chief strategy officer. He is a longtime video game developer, but also television producer. So he has like the digital media side of it, the licensing and the monetization that comes from those kinds of assets is his specialty. Carlos Garcia Acevedo is our main salesperson, let's say, our chief commercial officer in Europe. He comes from the digital agency side, and he's been running our partnerships program, sponsors in Europe. And Neil Duffy comes from a variety of kind of video gaming and collegiate esports opportunities over the last 10 years. He was with Cineplex for a period of time as well, running their esports group when they had that. And he is our chief commercial officer over here in North and South America. You can see we've got a very strong board, but let me also just highlight some of our prominent shareholders, because we not only have one, but we've got 2 large global telecommunication companies in our shareholders list: BCE and Telefonica. Telefonica being the largest Spanish language telecommunications company, and of course, everybody in Canada knows Bell. The Kimmel family is a large, prominent family here in North America. They've been prominent in professional sports. They had a minority interest in the Pittsburgh Penguins in the past, and entertainment and media. They're our largest single group of shareholders, that family. Montreal Canadiens, Ibai Llanos is our streamer that I mentioned that we partnered with earlier last year. Gerard Piqué is on our board. Gerard Piqué is, one of the biggest footballers, soccer players, World Cup winner in the world, probably a generational defender. He's Spanish and is actually, at the same time that we're basically running this, he's running kind of an influencer-driven soccer or football league called the Kings League, and we collaborate very closely with him because we're kind of in the same business and we're seeing the same things. Our the stock price has gone up a little bit, but with our about 125 shares outstanding, you can see our market cap is in and around 30 million. Now, let me just kind of touch on that a little bit, because as I was saying, the value of our third-party transactions just in League of Legends, just for that license, as I mentioned, the last 3 deals were done at 35 million. So that alone is bigger than our market cap. Plus, I have $9.5 million in cash and no liabilities or debt, right? So yeah, we're undervalued, but markets are like that, and what we try to do is focus on the business and the fundamentals, and right now our growth and our path to profitability. And I think that'll kind of work itself out. We in 2021 we went public with a lot of enthusiasm at 220 a share. As you can see, going back to that chart, which I think I did short shrift to, we've been able to grow our revenue, but we got caught up in the COVID stuff and other things that required some restructuring over that period of time. And so we kind of lagged a little bit. And then beyond that, small cap stocks just got crushed. I mean, if you were basically a small cap, particularly in the Canadian market, you just significantly underperformed the big cap stocks, the Nvidias and so forth, because if you can make those kinds of returns on Nvidia, why do you need to take the additional risk of going with a small cap? I think the cycle may be changing though. And as I said, we're in a position right now where we feel that we're offering very good value to shareholders at the current price. About half of our cap table is our float, and the other half is basically board, management, insiders, and the corporate partners, primarily Telefonica and Bell. And that's basically it. I think the next slide is taking you back to the beginning. I think I've touched on all of these points. Apologies if that was too comprehensive for some of you, and apologies obviously also for the cough and fit in between. Maybe you can edit that out before we share this video. But with that, I'm done, and I'll turn it back over to you, Paul, if you want to take some questions.
Yeah, thank you so much, Adam. A reminder, everybody that's listening, if you have any questions, and I see there are a few here that you'd like me to ask Adam, just use the chat function. We can take care of that. Adam, clearly there's been a lot of changes over the last couple of years. Restructuring is kind of the term I use right now. What, if anything, do you still have to do going forward, do you think, to get it optimized, or is it optimized now?
No, not optimized quite yet. I think there's some more work that needs to be done. I think, look, we are still not at the point where the sponsorship revenue is covering our overhead, right? So I'm as of the end of 2024, we're still operating in an EBITDA loss. Okay, so that means if you take a look at the way that I've been describing my business model, that means I take all of the money from my sponsorships, I take all of the money from my digital merchandise, and then I still have a loss at the end. Okay, and so the way to optimize that properly is obviously to grow your sponsorship revenue, right, and to maintain a cap on your costs. And so what I have done is I've put the word out to all of our teams and all of our partners internally and externally that we're not spending more on teams unless we get more money from partners. Okay, that's going to be our hard cap. And I think with 25, in terms of our expectation for 25, as I said, my plan right now calls for break-even profitability for the year. right? Once we get there, I'm still not at 100% optimized, but with, let's say, 30 million in revenues, I'm able to basically cover all of the costs. And once I get there, the incremental revenue, as I said, 70% average gross profits goes to the bottom line, right? So there is probably, I need to keep a lid on those costs, right? And then I need to drive the revenues. And my plan for the next 3 years, hopefully, is to go from roughly 30 million right now, 25 to 30 million in 2025. If I can get that to 50 million in the next 3 years, and look, 3 years ago, we were barely doing anything. Okay. So the trajectory is not crazy. At 50 million, I think we have a very profitable company, high growing, profitable company. I could probably drop 20% net margin off of 50 million in revenue. And you just got to keep the focus on both the costs and the revenues. This is a competitive business. And so what happens is, you get infatuated with the deal, in other words, right? And the deal that I'm talking about is your team, right? And think about, professional basketball. There's a whole bunch of these contracts that are going around. I think the Leafs just signed the player for 100 and whatever million. What happens is, you get to the point where, like, you just want to take that gamble and increase the cost for your teams and sign that big player. And what that does is it's a race to the bottom for an emerging industry, because the dumbest money sets the market. Okay. And we have been avoiding that, and we will not get into that. And our teams perform extremely well. We've got world championship teams over here, but we do it with hard work and perseverance and scouting and all the things that you got to do over there, rather than going out there and spending the money. Now, if I can keep a lid on those fixed costs, I think we're going to be a very profitable company.
What undoubtedly the improvement that's brought you here, you keep working on that, but what keeps you up at night right now? What are your biggest challenges you feel?
Biggest challenges are, it really goes back to the sponsors and the digital revenue that I've been talking so much about, right? In 2024 was the first year of that model that I've been talking about, and it was an incredibly successful model. But we do see, sponsors are going to spend more when they feel comfortable. So the sponsorship side of the business is is affected by global macroeconomic things, right? And while I have them locked up for 2 years, as I look down 2 years from now, you go into a renegotiation phase, and you're renegotiating against the state of the market and the world. Okay, so that's always a risk that we're basically trying to work on, and the way to mitigate that is to build those fans, promote those teams, and build the engagement. On the and then the other side is the digital stores, right? I mean, we've had a tremendously good year for the digital online merchandise, but this isn't something that has 10 years of history in the esports space, right? So, can I grow that from 5, 6, 7 million in revenue to 20, 30 million? I believe I can, but that is still to be proven. Okay, so I'm not sure that keeps me up at night, but that keeps me occupied with trying to figure it out.
And then when you look at it, if 4 or 5 years ago when you came out, the market was pretty excited about gaming and all sorts of things around esports. That's obviously changed from an investor standpoint. What's kind of been the reception as you get out there and tell the story again? What kind of pushbacks do you get from investors right now?
I don't know if I've been getting, like, we just started telling the story again, late last year. I think the first time we went out, I kind of hunkered down for a couple of years. Liquidity kind of faded, and to be honest, as long as we didn't have a path of profitability that I could explain to people, it was really hard to kind of get out there and tell people what the business was. And then everybody else was decreasing their valuations as well. And so I thought, as long as I've got cash, I'm just going to hunker down and fix the business. So we've done that, and we've started telling the story again in November. We've seen an increase in volumes, and people are starting to kind of pick away at it right now. I think I think the pushback is in two categories, I would say. One is some people don't get it at all. Okay, and so, like, I could go in and explain it in whatever way I want, and they just don't understand the concept of people playing video games competitively. Okay, so let's park those people, because I've had quite a few of those. The other is um, profitability, right? Some people are basically saying like, I need to see a path to profitability to feel comfortable about buying this, right? And I get that. Like I understand that's the case. There's some people that want to come in before, and there's some people that would rather come in after, right? And so right now we're trying to have conversations with both sides, right? The people that feel comfortable buying at what I believe is below our book value, kind of with limited downside risk, can pop in right now. And there's others that legitimately would rather pay $1 a share, against that business model at that time, $100 million market cap company, than at 30 cents a share. And, we're just going to work both sides. Right now, I'm going to focus on that profitability, verify the business model, talk to both. And as the business model comes together, I think they'll come in and buy.
Gotcha. Okay, why don't we jump on some of the questions that have come in? We've got one from Russell. It says, you mentioned the $15.99, I think, for the skins.
Yep.
How often does somebody pay for that? Is that something that's paid one time, and or is there an ongoing payment?
Yeah, so in that's for Call of Duty, and so Call of Duty has a new game every year. So this year the game is Black Ops 6. Okay, so we've got our skins for Black Ops 6, which are customized and new for that game. Okay, last year it was Modern Warfare 3, and so we had our skins for that game as well. So in Call of Duty, every year you have a new skin that is connected to the new game. Okay, and yeah, that's how it works over there. For other games, it's also annual. So in a free-to-play game like Valorant, each year they refresh the skins. You have a new design and a new opportunity, and basically I think those skins are sold closer to $20. They're called capsules in Valorant, and there's a refresh every year, right? And so we kind of look at it, to me those are kind of like service revenues, right? Most of those revenues come when the skin is launched, and then you've got a long tail afterwards that you basically sell. And as the long tail goes down to zero, there's a new skin launched.
Gotcha. Okay, another question from Russell. He says, how much do top players make?
Our highest paid player for us is probably, if I'm talking currency, am I talking about? I got to remember. Okay, so if I'm talking Canadian dollars, okay, our highest paid player is at about 850, right? Which would be pretty high. 850,000 is pretty good salary for somebody to play video games, right? In terms of other teams, look, there's definitely players out there making seven figures. I think the highest paid player in the world is making about 6 million US. Right, he plays for a team called T1. His name is Faker, but he's really famous. Okay, and he probably makes another 20 million elsewhere in terms of his own sponsorships. Okay, like he's a celebrity kind of person. We have been seeing that salaries have been declining over the last 2 or 3 years. In Europe, we've been able to institute with Riot a kind of soft salary cap that has actually had, kind of put a lid on salaries over there. Europe is conducive to putting salary caps, while the US is not. So in Call of Duty, there is no salary cap, but the salaries in Call of Duty are generally, between 80,000 and 300,000. So they range. It depends. I mean, the higher the salaries, the more revenue opportunities there are in that game.
Wow. And make sure my kid doesn't hear that.
Yeah. Counter-Strike is another one. I see Raheel there talking about, used to be a Counter-Strike 1.6. So he's like an OG, an original guy from way back, when actually people like him, he's probably not on here, but they think that that's when Counter-Strike used to be like a real game. Okay, now they've changed it and it's Counter-Strike 2. Counter-Strike is an interesting game because the system for that is quite different from anybody else. It's kind of like more of an open market system, and so it really is driven primarily by gambling and crypto, right? And so and it's also a very big game in Russia and Eastern European countries, and the revenues there can be significant, but they're risky, right? You have to kind of qualify for a major, and the players are expensive because a top tier betting company might be sponsoring you for 5 million US a year. Okay. And then a crypto company might be doing the same. And of course, that then drives the revenue, but also drives the player salary. Okay.
Mhm.
So we our team, Movie Star Koi, qualified for the Counter-Strike. There's two main majors in Counter-Strike. We qualified for one of the two last year, and did very well. We disbanded that roster of players, and we're now kind of revisiting Counter-Strike to figure out what the best approach is to that game. And frankly, we don't have a betting sponsor. We don't have a crypto sponsor. I don't think that brand, Movie Star Koi is like our Disney brand. Okay. We have a lot of younger people that are fans of that particular brand and those players. And we get a lot of pushback if we want to get into gambling with that brand. And so we're revisiting that and thinking maybe Counter-Strike is something we can bring to our Toronto Ultra brand, which is Call of Duty 18 plus, a different kind of type of game. But there's certainly lots of opportunity on Counter-Strike. Again, lots of revenues that we're missing, and that's kind of something that we're going to jump back into over the next little while.
Adam, it sounds like what you've been doing for the last couple of years is sort of more of the same, perfecting what you've been doing for a while. But if we look forward, is there anything kind of new? Is there any new initiatives that we haven't spoken about that that you're excited about?
Yeah. So, okay, we have not been doing the same. Okay, we've actually completely changed things, and maybe it didn't come out in the presentation here. What version one of esports was esports is like sports. Okay. And that's kind of how you're going to become rich at it, right? And what sports means is, you get these huge media deals, like the Super Bowl was just on. Think about the amount of money that Fox or whoever paid for those rights. The media rights, usually by the cable companies, drive all of the revenue, right? And the idea for esports back in 2019, 2018 was we would get these big media rights deals, right? And so we would be just like professional sports teams. And that model is a lean back model, right? What that is I run my Vancouver Canucks or whoever you want to be. I don't really do a lot with the community. I just basically get my players, fix my budget, and then wait for the revenue sharing to come in. Okay. I don't sell a lot of jerseys. I don't do a lot of promotional stuff because it is a sit back kind of a thing. I'm a rich billionaire guy. Give me my revenue share. Okay. Whether it's NFL or basketball or whatever, that's that model. Okay. And what that model doesn't work for esports is what we learned over the last 5 years, because our fans don't watch cable, okay? And they will not go to to go to a specific platform and say you can only watch the game over here. That's not how they consume media, okay? This is like the next generation of media consumption. And the way that they consume media is through Twitch and YouTube and Bilibili and whatever kind of platforms there are in Asia, and they consume them through their favorite co-streamers and influencers, okay? So in order for an esports team to be successful, you got to lean forward, okay? You got to create your own broadcast channel, which is what we've been able to do with our streamers, okay? So we control the distribution, platforms to our fans, but we also control the broadcast. They are watching my channel to see my teams, okay? And that is a lean forward model. And what that does is it opens up revenue opportunities because I own the channel to the consumer, but I can also sell them the skins and get the sponsors. And what you're going to find over the next 5 years, I think, is that the value of the media rights that are being paid for in the traditional sports model are going to decline. It's already starting to happen because the average viewership of traditional sports is 45 to 50. Okay. In 10 years, it's going to be 55 to 60. You have very few new audience growth in those businesses. Okay. While we're kind of at the crux of it. And what I see happening is we are, over the next 5 years, going to slowly become like the Netflix to the Blockbuster that is traditional sports. And I'm not saying traditional sports is going to go away like Blockbuster did. What I'm saying is that the model for professional sports will look more like esports. Okay. And when that starts to transition, the two industries will merge. And I think the esports people have the knowledge that is forward looking. We are doing the stuff that they will need to do. And anytime a professional sports organization has tried to go into esports, they have failed because they don't get it. I'll give you one more anecdote, okay? We did a couple of promotional things with Mitch Marner, who's Toronto Maple Leaf, okay? And we paired him with one of our Call of Duty players. I'm thinking, because I'm an older guy, Leafs, right? Big audience, Mitch Marner, everybody knows him. That's going to drive Mitch Marner's audience to our Call of Duty team. And the reality is, what happened is it worked the other way. Our fans don't know who Mitch Marner is, and they don't care about him. Okay, they followed our team, and it was Mitch Marner's audience that grew. Okay, and how much social media does Mitch Marner do? How much is he on Twitch? Is he streaming? Is he an influencer? No, he's just a hockey player. Okay, and that model is not sustainable in my view. So we've been able to transition from like the legacy traditional sports model to this new emerging, kind of lean forward model. And I think, I think the growth is going to continue significantly down the road.
I gotcha. And
That makes
understood.
sense? Yeah.
Absolutely. Absolutely. So then if we're as investors and we're looking forward watching the business right now, what do you think are the sort of the key metrics or maybe catalysts that we should pay the most attention to over the next little while?
I think there's two components. So first of all, we in the past we have not reported our gross margin. Okay, strategically. Okay, we've kind of shied away from doing that. Our concern was in the past, if I go to sponsors and tell them that my margins are really really high, they're gonna not want to pay me as much. Okay, um, and I just think I look, that's why. Okay, but I think what happens is investors get confused because they compare my 25 million in revenue with somebody's 80 million in revenue or 100 million in revenue, and that guy that's doing 100 million might have gross margins of 10%, right? So their gross profit's 10 million, mine at 70% is bigger than theirs. But how do you know that when you can't compare margins to margins? Okay, so I would say there's three components. One is the revenue growth. Okay, I expect we had a great year in 2024, like I said, 70% growth. Before any acquisitions in 2025, I think we're going to continue to grow closer to 30 million. I would take a look at the sustainability of our margins, our gross margins. Beginning in the first quarter, we're going to be reporting them. We will be reporting them in a non-audited way for 24, just to kind of, so we don't have to go back and audit the past. But beginning in first quarter 25, we will be reporting our gross margins. And I think you take a look at the revenue growth and you take a look at those margins, right? For me, I would like to target gross margins of somewhere north of 60%. I don't think I need them to be at 80. Okay. There's some lower margin things that I can do, like events and physical merchandise, that will bring that down, but will be accretive to our business. So if I can keep those gross margins above 60%, keep the revenue growing, you're going to see EBITDA profitability emerge out of the bottom. Okay. And those are the three things that I would say you've got to look at. Look at my margins, look at my revenue, and how am I doing with my profitability? And again, once I get to that point, okay, incremental revenue falls to the bottom line because my margins are very high. And I guess the second thing is, look, I made 5 acquisitions in the last 6 years. We're looking at opportunities out there. I think I think there's a lot of growth potential through acquisitions that we can make over the next 2, 3, 5 years. And so far, we've proven that we've got a pretty good knack for it.
Fantastic. This has been great, Adam. It's good to get you here to explain the story. But sort of last piece, is there a key message, or is there something we may have missed that you just want to make sure that everybody understands today?
First of all, let me go back and apologize for my coughing fit. See, I apologized
No
before
worries.
I got my coughing fit going. Okay, so I again,
No
I
worries.
kind of really regret that. Beyond that, look, this is we are pretty passionate about what we do, and if you are looking for a way, there's today's young generation, or what we refer to as today's generation of fans, is really a powerful cohort. I think they are developing habits and approaches that are different than millennials or Gen Xers or the people before them. They're kind of coming in, and I think the transition that we're going to see over the next 10 years is this generation grows up is going to, well, a lot of us older people are probably not going to like it, but it will change nevertheless, like it does before. And I think it's going to have significant change. And I think, you know, if you want to be invested in that change in a way that is kind of positive and holistic and authentic, I think, you know, esports and companies like Overactive are the best way to do it. You know, when I'm talking to my kids who are also Gen Zs, um, we argue kind of in a playful way because my favorite bands and my favorite, you know, music and television shows and all that kind of stuff is from when I was 23, 24, 25, right? And to them, that's kind of the old timer stuff, right? And when you talk to most people, the stuff that you really like my favorite hockey team is the one at when I was 25. And back then it was the Boston Bruins, okay? And the Boston Bruins have always been close to me, even though I kind of hate them now, okay? But I will always have a thing for the Boston Bruins. And, you know, the things that you do at that age, you know, 20 to 25, maybe 18 to 25, stays with you forever. Okay. And that I think is the sea change that we're seeing. I think that my fans that are 20 or 25 right now are still going to be my fans at 35 and 40. Okay. And then their kids are going to be fans. In other words, we're going to keep them and we're going to grow with the new kids because there is no new kid that doesn't play video games. Okay. And so if you can accumulate that channel of people that are fans of your brands and teams, again, the next Disney of the popular culture is going to come from this side of the business, not the legacy side of the business, which is frankly aging out.
Yeah, no, that a lot of the stuff you just said resonates with me, and I fully understand what you're trying to get at.
Yeah,
So, listen, this has been great, Adam. Thank you so much. We've been speaking with Adamou, CEO of Overactive Media, symbol OAM on the Venture Exchange. Look forward to catching up with you when we get another reason to get you back on here. So appreciate the time.
Thank you very much, Paul, Glenn, and everybody else.
Bye for now.